Welcome to this week's ASX strategy session. Great to have you with me. Thanks for joining me. I think we've got a pretty interesting show ready for today. A few things going on in the market, a few developments I want to go through in the ASX 200. Got lots going on in the commodities space and a couple of stocks I want to show you later on as well, which I think are worth having a bit of a think about. First of all, though, everything today is general commentary only. No personal advice given, general commentary only. Having gone through that, let's jump over into our charts. So I've got the ASX 200. We'll start off there this week, and it has been a strong rally in the ASX 200 this week. But is this rally to be trusted? Well, I've got a few charts I want to go through, try and answer that. And I think coupled with what's happening in the US, I'm going to cover that separately. I've done a separate video on that, so make sure you check out the US video. There are some really interesting things to consider. So first of all, I think this is a constructive rally. The buying has come in right near the 100-day moving average. So I've got the 100-day and the 50-day moving averages on this chart. And prices are also back above this support resistance zone, which comes in at around 7,720. Briefly broke below it last week. And when we were talking in last week's strategy session, I thought that the breakdown below this support meant that maybe we're going to head back down and retest the April low. But the breakdown didn't last very long at all. It was I guess it's like around that 100-day moving average was where the support came in, the buying came in, and we've quickly seen the market rally back above this, which became resistance, and there we are. We're pulled away from it again, and what I've been saying really is that we want to see accumulation on dips. That's been an important feature of what we've seen all this year, really. So all these dips back to the moving averages have found support and rallies. Then this deeper one, this longer consolidation we've had, it's also still finding accumulation happening around those moving averages. So that, I think that's a really important thing that we're seeing. And I think the key feature on this chart really is the range. It's the range that the market has been trading in over the last couple of months. And this is something we've been talking about for a while now. In fact, we first started talking about the potential for a multi-month consolidation when the ASX 200 started breaking below its 50-day moving average. That's when it appeared that something larger, some sort of a larger consolidation was probably in the makings, as opposed to these shorter pullbacks that we'd had, which only briefly came back to the 50-day moving average. And that, you know, this is what we've seen over the last 2 months. We've seen this range really start to take place. What's interesting now is we can actually start to define the range, because until recently it's really just been a possibility. Like back in April, mid-April, late April, we really didn't have a range. We just had the potential of one forming. But what we can do now, we can actually start to firm that range up. So let me just put some lines on this chart. So we can join up the March high with the April high, and that gives us an upper boundary. And for a lower boundary, we can use the April low, and looks like we can probably use the May low as well, given that strong bounce we've had in the last week. I usually like to see a low point hold for a few weeks before using it as a key reference within a range. But it is now markets back up towards the top end of the range, so I think it's reasonable to use this as one of the anchor points for the range. And the thing with ranges are that they're often either rectangular ranges or contracting ranges. And this is, of course, a contracting range. You can see these trend lines converge as we go further along towards what would become the apex if it lasted long enough. So yeah, this is a contracting range. And the way these things play out is that you get along the top end of the range, that's where you'll find supply coming into the market. That's what forms up the top of a range. Supply comes in at the top, and down at the bottom you get accumulation. And it's kind of one of those points where neither the buyers or the sellers dominate, and it's a bit of a neutral zone. They often form after trending periods, which of course is what we had earlier in the year, late last year into this year. We had a trending period. Now we've got this neutral period where the buyers and the sellers are almost in equilibrium, and you can see how the price action has been coiling up, and ultimately one of the sides wins, the buyers or the sellers. One will overwhelm the other, and that's when the new trending period can begin. Now, the thing with ranges are they don't always work out. They don't always lead to new trends. We can get false breakouts, of course, but they're often the starting point. They're often the starting point for new periods of either advance or decline. I still think this consolidation may need a bit more time to play out, but we do have some clear levels to watch. On the top side, it's the May and the April highs, which form up this converging line, or this downward line at the top. And on the downside, we've got the April and May lows, and we've got our trend line for that as well. And also look for the support around the moving averages, and also this 7,700 area, which has been a technically active region over the last few weeks. That's where we can look for additional support to come. So there's plenty to look for on the support side, and on the top side, we've really just got these two previous highs marking the upper boundary. It was also interesting to see a breakout in the financials during the week. So let me just get the financial ETF we've been tracking. This is the BetaShares ASX 200 financial ETF. And a couple of weeks back, you might remember we drew this upper resistance region. And I thought maybe, we did get the makings of a double top. And I was looking for this maybe as being not a lasting top as such, but maybe just more of a holding pattern. Maybe I thought the market was going to spend some more time coming back towards maybe the 100-day moving average, maybe a bit lower, all part of a larger consolidation. But that hasn't lasted too long at all. We've had the briefest of pullbacks to the 50-day, and now the financials are up at new highs. So I think that's a constructive thing for the market overall. I think that's a sign that the underlying tone remains bullish. And my approach through this period, it's really been about remaining long and or staying long, and that remains the case. There's nothing on these charts that we're looking at which suggests that we should be taking a different approach at this point. It remains an overall upward trending market. I'm using those wide trailing stops to try and see off consolidations and try and stay with those profitable positions. I was just looking inside my portfolio earlier, and they're just going to the actual stocks. So the stocks within the portfolio, I'm going to order them from top to bottom. And just looking down this list, I just counted up this morning, there are 12 stocks which are up over 100%. So this is why it's so important from my perspective that I want to hold these stocks. I don't want to be cashing them out because we're in a range and some of them are trading sideways. I want to give them lots of room to move around, because I have every reason to believe that there's still more upside potential in these stocks. Once the trends re-engage, if the trends re-engage, I want to still be on board these stocks. But at the same time, I'm protecting risk. I don't want to hold on to stocks that are in decline and just coming down through the list down at the bottom end of the portfolio. So you can see I don't have too much which is in the red, and that some of the stocks in the red are only in the red by a couple of percent, so that's not a big deal. I got a 6% and a 16%. So this one, GWA, it's probably the closest to getting to an exit point. Time-wise as well, probably doesn't have much more leeway, but everything else is okay to hold on at the moment. But I am quite diligent in pulling things out of the portfolio when they hit a stop loss. I won't hesitate to act if a stop is hit. And I think an exit strategy is one of the most important things you can have. I think it's really about, protecting your capital is so important. And I have been selling stocks over the last few weeks. Not many at this point. Another thing I can show you, I can go into my orders, and that will just show you what I've done over the last 3 weeks. So you can see I've got 1, 2, 3, 4, 5 stocks that I've sold. This top one, RAS Technology, was a modest profit, maybe about 10 or so percent. Black Cat was a modest loss. Electro Optic, that was the larger end of my losses, maybe around that 25% sort of mark thereabouts. G&G, small loss. GDF, small loss. So nothing. The losses are small, and this is the thing. Protecting capital is what keeps us in the game. So yes, we want the big wins. We want the big wins like you can see when I order it from top to bottom. We want these big wins, but if you're regularly having large losses, if you regularly lose large amounts of your capital, you won't have a seat at the table to potentially get these big wins. So this is why I'm always talking about risk reward. We want to protect our capital as much as possible. So now look, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. Just tells YouTube you're watching, you're engaging. YouTube does its thing, and shows other people. So please do that. It helps a lot. And hit that like button and hit that subscribe button if you're not a regular subscriber to the YouTube channel. That'd be great as well. Now I've got lots of more interesting stuff to go to. We've got the small orders, the commodities, got a couple of stocks I want to take you through, but of course that wraps up the free section. If you're not a strategy session member, I've got a link below. You can come, you can join up, become a strategy session member. It costs very little, and hopefully you'd get a lot of value if you were a member, and take you in a lot more detail about strategy and commodities and stocks. And so I think the feedback I get is that it's really interesting. So think about coming on board. Okay, now we've gone through all that, I think we should go over and we'll have a look at what the small ordinaries is doing this